Welcome to Sophie Daddy's channel. All right, today we're going to do something really cool. We're going to decode the market's secret language. I'm talking about seeing the real story behind every single price move, and we're going to do it using a super powerful technique called volume price analysis.
So let's just start with a question that I swear has frustrated every single trader out there. You know the feeling, right? You see a stock, it's finally breaking out, you get all excited, you jump in, and then bam, it just collapses right back down. Ugh, why does this happen all the time? Well, the answer, it actually lies in something most people just completely overlook.
Here's the thing. The problem is that price charts all by themselves can totally lie to you. Seriously. You see that big, beautiful green candle, and it looks so exciting, but it might not be real strength at all. It could just be a trap. These fake outs, they happen because price only tells you what happened. It never ever tells you the conviction that was behind that move.
And that's where volume comes in. That missing piece, the conviction, is revealed by volume. I love this analogy. Think of volume as the market's polygraph test, its lie detector. It's only when you start analyzing the trading activity alongside the price that you finally get the true story. That's how you separate the real moves from the fakes.
Now, what's really cool is this isn't some new trendy indicator that just popped up. Nope. The idea of following the money by analyzing volume, it's been around for over 100 years. So let's actually take a step back and trace where this powerful idea came from.
Okay, so what's so fascinating is that volume price analysis, or VPA for short, isn't a new fad at all. Its roots go way back to the early 1900s with Charles Dow himself. He was the one who first said, hey, volume has to confirm any real trend. Then, in the 20s and 30s, the legend Richard Wyckoff comes along and builds an entire methodology around it. And today, people like Anna Cooling and so many others are still adapting these exact principles for our modern digital markets. I mean, talk about a time-tested technique, right?
Wyckoff's real stroke of genius was this idea he called the composite man. It's basically his term for the big institutional players, the smart money. He figured out that their massive trades leave behind these really clear footprints in the volume data. So, the whole goal of VPA is to learn how to spot those footprints so you can trade with them instead of getting run over by them.
And you know what? Wyckoff didn't even stop there. He took all of this market action and boiled it down to 3 simple but really profound fundamental laws that basically govern everything.
Okay, so these 3 laws, they build the entire framework. First up, the law of supply and demand. Super simple economics, right? When demand is bigger than supply, prices go up. High volume on an up move, that shows strong demand. Easy. Second, the law of cause and effect. Think of a long period of quiet buying, that's the cause, building up all this potential for a huge uptrend, which is the effect. And then there's the third one, which, honestly, is probably the most powerful for day-to-day trading, the law of effort versus result.
Okay, this concept, this is where VPA really shines. So the effort is just the trading volume, and the result is the price move. Now, normally they should be in sync, right? More effort, bigger result. But what happens when you see a massive surge in volume? I mean, huge effort, but the price just goes nowhere. That right there is a giant red flag. It's screaming that there's a major battle happening just under the surface. It could be the big guys selling into all that retail buying frenzy, just absorbing all the demand right before they slam the price down. Finding these little mismatches, these anomalies, that's what gives you a serious edge.
All right, so that's the theory. We've got the laws down. But how do the pros, the modern institutions and traders, how do they actually apply this stuff? Well, they use a specialized toolkit to see all these dynamics right on their charts.
So there are really 2 main ways to look at volume. First, you've got your standard volume price analysis, or VPA. Those are the vertical bars you always see at the bottom of the chart. That's just showing you volume over time. Was today a high volume day or a low volume day? Simple. But then there's VWAP, or volume at price. This is totally different. It's a horizontal histogram on the side of your chart, and it shows you which specific price levels had the most trading action. They're not competing. They're 2 different perspectives that work together.
Okay, let's talk about one of the absolute most important tools in the entire institutional arsenal. It's called VWAP, the volume-weighted average price. And listen, this is not just another moving average. What it does is it calculates the average price for the day, but, and this is the key, it gives way more weight to the prices where the most volume was traded. You can really think of it as the true financial center of gravity for that day's trading.
So why should you care about this one line on a chart?
Because the huge institutions, the ones moving millions and billions of dollars, they use it as their main benchmark. Their goal for the day is incredibly simple. Buy their shares below the day's VWAP and sell their shares above it. If they can do that, they got a good price for their clients. So when you know the exact benchmark that the biggest players are watching, you suddenly have this powerful dynamic map of support and resistance for the entire day.
All right, so if VWAP is the market's center of gravity, then volume profile is like its X-ray. It shows you the hidden architecture of the market. You get these key levels, like the point of control, or POC. That's the single price with the absolute most volume, and it acts like a magnet for price. Then you have high volume nodes, which are zones of stability. They act as really strong support and resistance. And the low volume nodes? Oh, those are zones of rejection, where price can just slice through like a hot knife through butter.
Okay, so we've covered the history, we've covered the laws, and we've covered the tools. Now for the most important part. How do we tie all of this stuff together to get a real, actionable, analytical edge in the market? This right here, this is the absolute heart of the whole thing. It's so simple. Price shows you what happened, volume tells you why it happened. Price shows you a breakout from a range. Volume tells you if that breakout is for real or if it's just a trap. Price shows a massive drop. Volume tells you if it's just retail panic selling or if it's the smart money quietly buying up everything at a discount. See? Volume gives you the context that price by itself can never, ever give you.
And look, this isn't just some old-school trader lore we're talking about. Modern academic research actually backs all of this up. It confirms that volume contains real, predictive information for where prices might go next. I mean, study after study shows that trading strategies that incorporate volume just flat-out perform better.
There was this one really fascinating study, for example, that tracked the trading of hedge funds. And what it found was that the stocks they were trading the most aggressively, the ones where they consumed the most volume, those stocks went on to outperform the market by a staggering 5 to 9% every year. That's some powerful, hard data proof that following those institutional footprints can really pay off.
So, at the end of the day, learning to use VPA is about so much more than just slapping a few new indicators on your chart. It's really about developing a much deeper, more profound understanding of how the market actually works. It forces you to stop just chasing superficial patterns and to start really engaging with the fundamental forces of supply and demand that are the things that actually drive prices.
So, really, it all just boils down to this. Price shows you the headline. Volume reveals the real story. The only question left for you is, which story are you going to follow?
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.